Hello and a great welcome. So in this particular session, as you can see flashing on your screens, we are going to start a chapter that happens to be internal reconstruction. Now, internal reconstruction is a pretty formidable chapter, no doubt about that, but not a very tough one at the same time. It's pretty easy in comparison to the earlier ones. So as far as internal reconstruction is concerned, what exactly internal reconstruction is and why the companies actually go for internal reconstruction and how internal reconstruction scheme is implemented, adopted and implemented, what benefits it could actually fetch to the enterprise or the companies. So these are the questions we would like to unfold all the answers to these what we call mysteries in a short while, no doubt about that. But first of all, as usual, we need to have a firm grounding over the conceptuality of internal reconstruction related to this particular chapter. So in order to comprehend all the things which I just mentioned a moment ago, and in order to seek what we call answers to those questions, first of all, just have a look over here and just listen to me. It's a simply rough work. Right now, you need to require to actually write anything. I presume that this is the balance sheet of a particular company. This is the balance sheet of a particular company. And just to make the point a little bit more simple, I am preparing it in T format, correct? Let us say this is the balance sheet of a particular company, and in the balance sheet there are some items like, let us say, plant and machinery, or in fact property, plant and equipment like plant, machinery, land, building, etc. And value written in the outer column is, let us say, 10 lakh, or let us say 100 lakhs, correct? 100 lakh is the value. However, in bracket it is written market value is just about 90 lakhs, correct? Then besides that, there are some non-current assets. These are non-current assets, and besides that, there are some current assets like what we call stock, as we call them, inventories nowadays, trade receivable, debtors, etc., to the tune of, let us say, 200 lakhs, correct? And besides that, there are some items like profit and loss account debit balance. Remember one thing, nowadays, profit and loss account debit balance is not written towards the asset side, rather it is written under the heading reserve and surplus, and moreover nowadays we prepare balance sheet in what we call vertical format. This is just to make the point a little bit more clear. I'm preparing the balance sheet in this fashion, correct? There is a profit or loss account debit balance, let us say, to the extent of 10 lakh. Similarly, there are some items, let us say, preliminary expenses to the extent of 5 lakh. There are some underwriting commission expenses to the extent of, let us say, 4 lakh. And similarly, there are some expenses in the form of discount on debentures to the extent of 1 lakh. Correct? We need not require to total up the balance sheet. This is just to actually make the point a little bit more clear. Correct? And similarly, towards the liability side, let us say there are equity share capital. And we have equity share capital, let us say, we have 10 lakh shares of rupees 10 each, total 100 lakhs. Then we have, let us say, 10% preference share capital, and we presume that 10% preference share capital is equal to 20 lakhs at the rate of 10 each. Let us say it is equal to 200 lakhs. And then there are some liabilities. Let us say, to the extent of 20 lakhs. This is the balance sheet of a particular concern, and we further presume that this particular entity is operating since last 14-15 years. Correct? Let us say current year is its 15th year of operation. Now, if anyone is going to look at the position of this particular company, suppose if I have got a bit of idea regarding accounting, and if I'm going to have a look over the what we call position of this particular company, I'm going to derive a very bad image regarding this particular company. I'm not going to have very fine views regarding the performance of the company. In fact, because I have got a bit of knowledge, so I can conclude and infer out of this that the position of the company is extremely feeble, extremely weak, and company is virtually passing through a phase of financial crisis. If I happen to be a potential investor, quite obviously the moment I am going to have a look over the what we call position of this particular company, quite obviously I am not going to invest into this particular concern because of the reasons as I just told you. Similarly, if I happen to be a financial institution, quite obviously the position of this company, as I told you, is very weak, and being a financial institution, I would refrain myself, I will stop myself from lending any what we call loan to this particular company. Are you getting my point or not? Similarly, if I happen to be, let us say, any lender, likewise, I'm not going to provide any loan to this particular company. So all in all, what I want to say is that when we are going to have a look over this particular company, we all are deriving a very bad image, correct, regarding the affairs of the company. But the question is, why we are deriving a bad image regarding the performance of this particular company? You must have seen that in the balance sheet, especially towards the asset side, there are some items which as a rule should not appear. For example, there is profit and loss account, there is preliminary expenses, there are underwriting commission, and there are discount on issued debentures. Profit and loss account is accumulated loss, and all these expenses, as you know, and you have been calling them as miscellaneous expenditure, fictitious assets, isn't it or not? Or expenditures yet to be written off. That means these are such expenses which logically should be written off, correct? At least within a period of 10 years, and I've already told you this particular company is operating since last what we call 14-15 years, and especially if you are in the business since a long period of time, and in spite of that, if such items are featuring in your balance sheet, quite obviously these are sending a message to the various parties, whosoever is having interest in your concern, that you are not having the required amount of profit to write off what we call these items. Correct? I will simply call them, in fact, all these items, accumulated losses and fictitious item or valueless items, can be collaborated as valueless items. These are valueless items. These are not assets. They appear towards the asset side simply because they are having the debit balances. And why they are having the debit balances? Because company is not earning sufficient amount of profit to write them off. So that is the reason why I'm telling you, the moment we are going to have a look over the affairs of this particular company, we will conclude that, as I told you earlier, that this particular company is not earning sufficient amount of profit, number one. Number two, this company is passing through a phase of virtual financial crisis. And number three, very drastic conclusion, that would this company survive in long period or not? So these are the questions which will get tossed up before us. And as I told you, the reason behind is that the existence of such items. Not only this, if we will look closely, when I wrote property, plant and equipment, we have written in the outer column 100 lakhs, but their actual market value is 90 lakh. Logically, no company should actually write its asset at a value higher than the market value in its balance sheet. But this company is exactly doing that. That means it is violating the normal principle of recording an item. The reason being is that it means if I will look into the balance sheet, I will immediately conclude that this company is not having the required amount of profits to write off what we call 10 lakh excess amount, which we have written over here. We have shown property, plant and equipment at 100 lakh and its market value is just 90 lakh. So again, we may say that this is an overvalued item. This is an overvalued item. So whensoever if you are going to have a look over the concern, especially the balance sheet of a concern, and if you find what we call there are lots of overvalued items and there are lots of what we call valueless items appearing in the balance sheet, quite obviously you will conclude on similar lines which I have already told you so many times now. Correct? That means the overvalued items and valueless items simply reflects three important points. One, the position of the company is virtually in a mess. That means this company is not functioning smoothly. Number one. Number two, company is passing through a phase of financial crisis. And number three, very important, this company is not earning required amount of profits. So if we will combine all scenario of these questions, we will conclude one thing, that survival of this company looks very questionable. And that is the reason, if you happen to be a potential investor, if you happen to be a lending institute, quite obviously, you will not show any interest in the functioning of this particular company. As a potential investor, you will never ever invest into this particular company. Similarly, as I told earlier, if you happen to be a financial institution, you are not going to actually give them any loan. So that is the reason survival of this company would become questionable. Now, we are analyzing the situation of this particular company after having a look over the what we call over the items of this particular company which are presented below, which are presented here. Now, let us presume for a while, if you are the director of this particular company, quite obviously you are the director of a company, you are a very qualified person, there is no question regarding the intellectuality and there is no question regarding the what we call understandability. So quite obviously what we are thinking, even the director of this company might be in the know. Even directors know that if they are going to publish the balance sheet in the leading newspapers, correct, with such items, quite obviously the scenario will be very drastic because they too can visualize that anyone who is going to have a look over the what we call affairs of this particular company, he will conclude that company is in a virtual financial mess. And no financial institution would like to lend any money. No potential investor would like to invest his money into our company. Correct? So even directors also know. So because directors are aware of all these particular things, so more often than not, when a company actually accumulates over a long period of time, lots of overvalued items and lots of valueless items in its balance sheet, then scenario becomes very drastic and very horrendous. So in order to overcome such a scenario, more often than not, company go for a scheme of internal reconstruction. A scheme of internal reconstruction. So what is the scheme of internal reconstruction? We will see later on that basic objective of scheme of internal reconstruction is to somehow clear out all the overvalued portions of the asset. For example, in this case, overvalued portion is 10 lakh. Difference of 90 and 100 lakh. So internal reconstruction scheme is basically adopted by the enterprises in order to somehow actually clear off, as I told you, overvalued portion and of course to write off all the valueless items like profit and loss account, debit balance, preliminary expenses, underwriting commission and discount on debenture. That is the basically theme of internal reconstruction. Now the next question quite obviously is how we achieve this particular objective. Because right now the scenario of this particular company looks very, very horrendous. So somehow we want to give it a very good face, at least a face-saving picture. So in order to give it a face-saving picture, we will go for scheme of internal reconstruction. Under the scheme of internal reconstruction, we would try to somehow wipe out all these items from the balance sheet and we will try to wipe out all the overvalued portions. So this is the theme of internal reconstruction scheme. Now the next question, as I told you, how this scheme and objective and aspirations are achieved. See here, in order to adopt and implement the scheme of internal reconstruction, the directors are going to make a request to all the parties who have invested into their concern. For example, who are the investors? Basically, the equity shareholder, preference shareholder, there might be debenture holders because they provide actually sort of loan to us. Correct? There might be financial institutions. So company will request all the parties whosoever have invested into the concern and will try to actually make a request to them that please waive a part. We will use this word so often in this particular chapter. Waive. Waive means to remit. To waive a part of. Waive means suppose if I have given you a loan of rupees 10 lakh. Suppose if I have given you a loan of rupees 10 lakh for a period of 3 years. After 3 years, you tell me, sir, please waive off, waive off means to leave out. Please waive off 1 lakh and we will pay you only 9 lakh. I accept, it's okay. You pay me 9 lakh, I will waive 1 lakh. I hope you got the point of waive, correct? So waive means to remit, to waive. These are the words which we are going to use so often during the entire length and breadth of this particular chapter. So under the scheme of internal reconstruction, directors are going to actually somehow persuade all the parties whosoever has invested into their concern to waive a part of their contribution. We will ask the various parties to kindly waive to kindly remit a part of their contribution. For example, let us say there are equity shareholders who have provided us a loan, provided us contribution of 100 lakhs. So we will ask the equity shareholder, let us say, to waive 10 lakh. Correct? That means we are telling the equity shareholders that we will pay you only 90 lakhs. So that means we are asking a waivement of 10 lakh. Correct? So in this way, company will ask the different parties to waive a part of their contribution, and whatever amount these parties will waive, correct? So that will become a sort of saving for the company, because if I have taken a loan from somebody, let us say worth rupees 100 lakh, and that party has waived 10 lakh, that means I am supposed to pay him only 90 lakhs. So somehow that means I have saved amount 10 lakh. Similarly, let us say we have persuaded the preference shareholders to waive a part of their amount, let us say 20 lakh. So whatever amount is waived, that is a sort of savings for the company, or you can in simple words say that that is a sort of gain for the company. Is it clear to you? Let us say for a while we persuaded these two parties to waive 30 lakhs rupees. So whatever amount is waived by the contributories means equity shareholders, preference shareholders, etc., even debenture holders, even lenders. So whatever amount is waived off, that will be considered as a gain from the perspective of the company. Then this gain will be transferred to an account that is known as reconstruction account. We will use these two words, waive, remit, and reconstruction. And reconstruction account is also known as capital reduction account. So whatever amount company will save from the various parties, that will be transferred to reconstruction account or capital reduction account. And then whatever amount will get accumulated in the reconstruction and capital reduction account, that amount will be used in writing off all the valueless items, and of course in writing off overvalued portions of overvalued items. So this is a bird's eye view of what we call a scheme of internal reconstruction. Now the next question is, I told you, in order to adopt the scheme of internal reconstruction, directors of the company are going to actually first of all hold a meeting with the various parties. Directors are going to hold a meeting with the parties. When I say parties, here I means all those parties who might have contributed to the financing of this particular concern. For example, these parties could be equity shareholder, these parties could be preference shareholders, these parties could be debenture holders, correct? Now director will, as I told you a moment ago, director will ask these parties to waive or remit a part of their contribution. For example, let us presume for a while, let us say there are 1 lakh shareholder. Just forget about the previous case now, correct? Let us say there are 1 lakh shareholders, 1 lakh equity shares of this particular company, of a particular company, let us say X Limited. 1 lakh equity shares of rupees 10 each. So total amount received by the company through the equity shares is equal to 10 lakh. Now, when directors are going to hold a meeting with the equity shareholder, of course, in connection with a scheme of internal reconstruction, where our intention is to somehow persuade the party to waive a part of their contribution or to remit a part of their contribution. Correct? So that is why we are holding a meeting with the various parties, because we want to get some discount, some waivement, some remit. Is it clear to you or not? So directors are going to hold a meeting with the equity shareholder. In the meeting, equity shareholders, let us say, directors of the company tell to the equity shareholder that we are very thankful to you that you have purchased our 1 lakh shares of rupees 10 each, and no doubt you have contributed to us 10 lakh rupees. But because we are right now in a financial crunch and our position is not very good, and we are passing through a phase of financial crisis and we are not earning sufficient amount of profits. So today we are holding a meeting with you with the intention that we want to get your cooperation. Now the equity shareholder says, sir, what sort of contribution you want from us? So directors say that we would like you to understand that you presume, directors are telling to the equity shareholder who have purchased who have subscribed to 1 lakh shares of 10 each, correct? So directors are telling to the equity shareholder that you presume as if you haven't paid us at the rate of rupees 10. you presume you have paid us at the rate of rupees 3 only. That means directors of the company are trying to tell to the equity shareholders that you forget that you have paid 10 lakh. Directors are trying to tell indirectly to the equity shareholder that you presume as if you have paid us only 3 lakh and not 10 lakh. Indirectly, directors are telling to the equity shareholder you forget 7 lakh. Actually, equity shareholder have subscribed 1 lakh shares of rupees 10 each. But directors are trying to tell them that now you presume as if that you have purchased 1 lakh share at the rate of rupees 3. Suppose you are one of the shareholder and you have purchased 1000 share of this particular company. Of course, one share is of rupees 10, and let us say you have already paid 10,000 rupees. So what directors are trying to tell you that you forget that you have paid us what we call 10,000. Directors are trying to tell you that you presume as if you have paid only 3,000 and not 10,000. That means directors are trying to tell you that you kindly waive 7,000 rupees or forget 7,000 rupees. Now the next big question is, quite obviously you would be very keen to know, would any sane person worth his salt is going to accept such a great amount of injustice? When directors of the company are telling to the equity shareholder, you forget 10 lakh and presume you have paid us only 3 lakh, no sane person, no person worth his salt is going to accept this sort of injustice. Would any? Quite obviously, no one is going to accept. Whether equity shareholders are going to accept it or not, that's a different issue. I will come to that in a short while. Don't worry about that. But just for a while, think that equity shareholder did not show any protest. So then company will pass an entry, equity share capital, and company will write in bracket old, because this is company's old equity share capital. 2. Equity share capital, new. Now this will become new equity share capital. And presuming that equity shareholder did not show any request, it did not show any protest, correct? So this amount will be transferred to reconstruction account, because this will be considered as a gain to the company. Because earlier company was supposed to pay to the shareholder 7 lakh and now company is supposed to pay them 3 lakh. So this amount which company will get waived off from the equity shareholder, this amount is known as waived. We will presume that equity shareholder has agreed to waive 7 lakh rupees out of their contribution of 7 lakh. So this out of their contribution of 10 lakh, they have waived 7 lakh, and this amount will be transferred to an account that is known as reconstruction account, and it is also known as capital reduction account. Correct? Whether equity shareholder are going to accept or not, I will come to that particular point. Don't worry. But I'm presuming for a while that equity shareholder have agreed to it. Similarly, the directors of the company will ask the preference shareholder. Let us say this company is having, X Limited is having 10% preference share capital, and presume for a while that there are only 1,000 share of rupees 100 each, that is equal to 1 lakh. And similarly, director asks the preference shareholders that now we are converting your share of 1,000 into 100 into 1,000 share of 80 only. That means directors of the company are trying to tell to the preference shareholder that you presume that you haven't subscribed 1,000 share at the rate of 100. You now presume that you have subscribed 1,000 share only at the rate of 80. That means you haven't paid us 1 lakh. Rather, you presume that you have paid us only 80 lakh. So, in this case, the directors of the company will save how much? 1,000 into 20, that is equal to 20,000, and this amount will be transferred to reconstruction account, as I told you. This capital will be debited, and 10% preference share capital new. This will be considered as new preference share capital. So that is the point. Similarly, company may actually ask the debenture holder to waive a part of their contribution. I have already told you. Now, whatever amount is waived off, that amount will be transferred to an account known as reconstruction account or capital reduction account. Now, whatever amount which will get accumulated in the reconstruction account, then we will use this item in writing of valueless item, VLI, valueless item, and overvalued portions overvalued portion, and then we will be able to clear off what we call our balance sheet from such items which are straining the image of the company. Is it clear to you or not? Now I come back to the question which you would like to know answer to. When I told you that there are 1 lakh shareholders of this particular company and they have subscribed 1 lakh share and they have paid 10 lakh, that means company has received 10 lakh from the equity shareholders. Now when the company will tell to the equity shareholders that we are converting your share of 10 into 3, that means we are trying to tell to the equity shareholder that you forget that you have paid us 10 lakh, you presume now you have paid us only 3 lakh, correct? And you forget directly or indirectly out of 10 lakh, 7 lakh rupees you forget. Now you presume that you have paid us only 3 lakh. And I told you that if 2 persons in public life are going to talk in such a manner, immediately from one side police and from the other side ambulance will come. If Mr. A has given a loan of 10 lakh to Mr. B and Mr. B, let us say, tells to Mr. A that you forget 7 lakh, so a fight will definitely break, and that is the reason why these two things will be invited. So here the question is, will equity shareholder will accept such a proposition from the directors or not? The big issue and the big question is this. I have already told you, if I have given you a loan of rupees 10 lakh and you will tell me forget 7 lakh, would I agree to it? Definitely no sane person in human life are going to accept such injustice. No person, as I told earlier, worth his salt, correct, is going to what we call accept this proposition. But you will be amazed to see that equity shareholder will accept this proposition. Now I will prove that how they are going to accept this proposition. But you will be surprised to see to it that in spite of such a great amount of injustice, equity shareholders will have to accept. In fact, they will have no room even to protest. They cannot show any dissent. They cannot do any protest. They cannot what we call raise their voice against this proposition. Now I will tell you the reason. Why? Suppose equity shareholder, let us say when the meeting was held and in the meeting the director told the equity shareholder, well, we are convert your share of 10 into 3 and you forget per share 7 rupees. The equity shareholder will feel inside of their heart very bad about it, but they have no alternative. Why? Because if they are going to, let us say, raise their voice and they start protesting, no, we are not going to accept this proposition, then what will happen? If equity shareholder will not agree, then what will happen? The scheme of internal reconstruction cannot be passed. Now, if internal reconstruction scheme cannot be passed, then you can visualize the scenario, future scenario of this particular company when I told about those scenarios. If a scheme of internal reconstruction cannot be adopted, then sooner or later, after some time, this company will get liquidated. This company is surely going to get liquidated. Are you getting my point or not? If the scheme of internal reconstruction cannot be adopted and implemented, then what will happen? This company sooner or later will get liquidated. And if the company will get liquidated, because when a company or concern gets liquidated, then after paying off all other parties, whatever is left, that is paid to the equity shareholder. And 99, you leave alone. There are more than 100% chances that if the company will get liquidated, equity shareholder will not get any amount, any penny. So that is the reason equity shareholder here have no alternative. They have no choice, no discretion. Because they know that if they are going to protest, this company is going to get liquidated. And if the company will get liquidated, they will lose entire 10 lakh rupees. However, if they are not going to protest and if they agree to this proposition, then perhaps they will live in the hope that in future the prospects of the company would improve and they will at least get some recovery of their amount. So I hope you got the point, because so often in the question you will see that equity shareholder, a share of rupees 10 is converted into 1. So at that time you may wonder actually why the hell in the world equity shareholder are agreeing to this proposition. In fact, that is the reason actually why equity shareholder will have to agree, because they do not have any what we call choice, no discretion, and in fact no alternative. Is it clear to you or not? So, in case of equity shareholder, that means when a company implements the scheme of internal reconstruction, generally no problem arises from the side of equity shareholders, because equity shareholder do not have any choice. And to be very honest with you, when extraordinary general meeting is conducted for the purpose of implementation of internal reconstruction scheme in practical life, even equity shareholder do not attend that particular meeting, to be very honest with you, because they know that they don't have any say, they don't have any choice, as I told you. So there is no point in attending the meeting. Let's go ahead with whatever directors want to actually do. Now, coming over to preference shareholder. It is easier to get the cooperation of the equity shareholder because equity shareholder are not in a position to protest. But same thing is not true in respect of preference shareholder. Because preference shareholder know that even if this particular company will get liquidated, more or less they stand on a safer ground. Correct? So chances are still bright that they will get what we call recovery of their amount, even if the company will get liquidated, because their number is prior to the equity shareholder. So preference shareholder do not have that sort of scare or fear that if the company will get liquidated, we will lose our amount. So that is the reason, in order to seek the cooperation, in order to persuade the preference shareholder, company tries to actually attract them. Company tries to lure them. Have you heard this word lure? Lure means to attract somebody, to tempt somebody. Correct? For example, as you must have seen, the hunters actually, when they go for hunting, in order to actually invite their target, this what we call throw, you can say breads or something or some eatables, to lure the what we call that particular animal to come over to that particular point. So similarly here, in order to lure, in order to attract the preference shareholder, we give them a sort of greed. The greed is that we tell to the preference shareholder, right now, let us say you are 10% preference shareholder. So company will tell, we will convert your share from 100 to 80. But you don't worry, we will increase your rate of dividend, let us say from 10% to 15%. So that is generally what we call done in practical life. In order to what we call seek the cooperation of the preference shareholder, we lure them by increasing their rate of dividend so that they do not show any protest. Correct? Similarly, with respect to debenture holder, in order to get their cooperation, what we do? We simply what we call put up a bait, B-A-I-T. We put up a bait, we put up a sort of incentive before them that we will increase your rate of interest from so and so to so and so, and please actually waive a part of their contribution. So whatever part then, as I have told you now several times, so whatever part is waived off, that is a sort of gain that is credited to reconstruction account. Then whatever amount gets accumulated in the reconstruction account, after that, we will then start what we call clearing off all the overvalued portion and valueless items. So this is all about a scheme of internal reconstruction. Is it clear to you or not? I hope you got a fair idea of internal reconstruction scheme. Now, you can write some note along with me before we start attempting the practical part. Let me first wipe it out. So you pull out your pen, pencils, etc., whatever it is, and start writing along with me. I've already told you regarding the scheme of internal reconstruction. So now we need to have a bit of what we call idea regarding the scheme of internal reconstruction through notes. Correct? It is always better to write a brief idea so that later on, whensoever you do any sort of revision, you do not what we call have any sort of problem. Now, as far as scheme of internal reconstruction is concerned, I have already told you that presence of items like overvalued items and what we call valueless items, they work against the image of the company. So we start with this point. presence of an item, presence of items in the balance sheet, presence of item in the balance sheet, such as debit balance of profit and loss account or P&L debit balance, deferred expenditure. Deferred expenditure means such expenses or expenditure which are yet to be written off. Deferred expenditures like preliminary expenses, underwriting commission, discount on shares and debentures, any suspense account like advertisement suspense account, any suspense account, etc. So presence of items in the balance sheet such as profit and loss account, debit balance and all these items, correct, works, as I've already told you, works against the image of the company. Works against the image of the company. Image of the company. So the presence of such items definitely works against the image of the company and indicates what? It indicates that company is passing through a phase of financial crisis and indicates that entity is passing through a phase of financial crisis, passing through a phase of financial crisis, and not earning sufficient profits. So these are the two key indicators. These are the two key what we call factors which presence of these items reflects. I have already told you on account of aforementioned reasons, no potential investor is going to actually invest into our company. Financial institutions are not going to lend any money, and these will bring horrendous consequences. So right then, on account of aforementioned reasons, no potential investor would like to invest into the said concern. Said concern means the company which is right now is not having sufficient amount of profit. Invest into the said concern. Concern here means company or enterprise. Concern. And similarly, lenders and financial institutions too would refrain themselves means to stop themselves. To would refrain, REFRAIN, refrain themselves from extending any loan. Extending any loan to the said concern. To the said concern. So, in the capital market, when potential investors and financial institutions feel very bad about the what we call position of a particular company, to be very honest with you, the survival of the company becomes extremely questionable. So that is the reason, on account of such consequences, the functioning of the company shall become extremely cumbersome, troublesome, extremely cumbersome, CUMBER, cumbersome, and as I told you, chances of survival of the company two shall become bleak. Bleak means shall become bleak, BLEAK. Actually, bleak basically means almost like fog, when we cannot see something very clearly. Here, bleak means very less, very slim. So that is the reason. As such, it becomes, so therefore it becomes imperative. Imperative means utmost necessity. As such, it becomes imperative. Correct? To write off at the earliest all the overvalued portions, overvalued portions. Now this overvalued portion is a pretty long word, henceforth I will simply use OVP, overvalued portions, and valueless items. Valueless items, when we say, it means accumulated losses and all deferred expenditure. Valueless items. Again, this valueless item is a pretty long word, so I am going to use the short form VLI. Correct? So it becomes imperative for us to write off, as I told you earlier, to clear off what we call balance sheet from what we call such items. So a scheme which we adopt to do so is known as scheme of internal reconstruction. So here we write the scheme that is adopted, the scheme that is adopted to write off all such items is known as a scheme of internal reconstruction. Is known as a scheme of internal reconstruction. IR, internal reconstruction. Correct? So in brief, we may say that internal reconstruction scheme is basically adopted to achieve two important objectives, as I've already told you, to somehow clear out what we call overvalued portion and of course valueless items. In brief, one may conclude that a scheme of internal reconstruction is adopted to A. Write off all the overvalued portions, OVP, overvalued portions, and B. To write off all valueless items. Valueless item means profit or loss account, debit balance, and all deferred expenditure like preliminary expenses, underwriting commission, discount on issue of shares, and any suspense account. Is it clear to you? Now, I also told you how we have to adopt the scheme of internal reconstruction. So under the scheme of internal reconstruction, I have already told you, various parties such as equity shareholders, debenture holders, preference shareholder, and if the need arises, even we try to persuade the creditors, correct, to waive a part of their contribution. So that is exactly what we are going to write next. Under the scheme, comma, various parties such as equity shareholders, preference shareholders, debenture holders, lenders, etc. are requested to waive WAIVE or remit, REMIT. Remit means to rub out, correct? To remit a part of their contribution. A part of their contribution. A part of their contribution. I have already told you, amount which is waived by these party will be transferred to an account known as internal reconstruction account, or what we call capital reduction account. Amount so waived is credited to a newly opened account titled as, now this newly opened account is titled as Reconstruction account, and in short form I will write it R/C, Reconstruction account or capital reduction account. So this is all about, and I have already told you, now whatever amount which will ultimately gets accumulated in the reconstruction or capital reduction account, then we will utilize that in writing off all the overvalued items. This is the last point which I am going to present. Amount accumulated in reconstruction account or capital reduction account is then utilized in writing off all the overvalued portions and valueless items. Now, what happened? Let us say in my reconstruction account, total accumulated balance is 1 lakh. And let us say I have written overvalued portions to the extent of 60,000. And let us say valueless items to the extent of 30,000. So some balance will be left in this particular account. If some balance will be left, that balance will be transferred to capital reserve account because it is considered as a capital reserve. Capital profit it is considered. Any profit which a concern actually receives without selling its product or services is nothing but capital profits. So this time the profit which company is having, correct, not because of sale of the products or sale of the services, that is why it is known as capital profit and it is transferred to capital reserve. Any balance left in the reconstruction account after writing off overvalued portions and valueless items is transferred to is transferred to as I told you, capital reserve account. Is transferred to capital reserve account. Correct? So, this is all about a scheme of internal reconstruction. So, I have given you a bird's eye view with respect to what we call scheme of internal reconstruction. In the next session, when we are going to meet, obviously, we will take up practicals. And as usual, we are going to do lots of practicals in this particular chapter. So, shall meet you in the next session with something obviously new.